Welcome to Space Nexus. Please subscribe and hit the bell icon for more breaking updates. The winds of economic change are blowing across North America, sweeping through cities and towns, touching every corner of daily life, from the bustling metropolises to the quiet suburbs. The impact is being felt in ways both subtle and profound. Yet, the stories these winds carry are starkly different on either side of the border, revealing a tale of two economies moving in opposite directions. In the United States, historic layoffs at Verizon are just one sign of a broader economic slowdown. The uncertainty is spreading, with anxiety rippling from Wall Street's trading floors to the small businesses lining Main Street. Headlines are dominated by news of job cuts, rising costs, and political gridlock in Washington. For many Americans, it feels like the nation is bracing for a tough winter, unsure of what the next season will bring. Meanwhile, just across the border, Canada is charting a steadier course. Its labor market is showing signs of stability, and consumer spending remains surprisingly resilient, with shoppers filling malls and stores. Canadian factories are humming with activity, and the central bank expresses confidence in the country's ability to weather global storms. There's a sense of cautious optimism in the air. This growing divergence between two closely linked economies is sending ripples far beyond their borders, with global markets watching closely. For millions of people, these trends are deeply personal. A Verizon manager in the US worries about their future, facing tough choices and uncertainty at home. Meanwhile, a Canadian factory worker feels a renewed sense of job security, hopeful that stability will last and provide for their family. Why are these economic twins, so closely connected by trade and history, now finding themselves on such different paths? Understanding this divide is key to grasping the challenges and opportunities that lie ahead for both countries, and for the world. As the story unfolds, decisions made in boardrooms and government offices will shape the future for both nations, determining whether they move closer together or drift further apart. Verizon's announcement of 15,000 layoffs, 15% of its workforce, sent shockwaves through the corporate world and left employees reeling. The news broke early on a Monday morning, catching many off guard and sparking immediate concern across the industry. This marks the company's largest cut ever, a move that signals just how serious Verizon is about reinventing itself in a rapidly changing market. The scale of the layoffs is unprecedented in the company's history, and it's a clear sign that major transformation is underway. The restructuring targets non-union management, with hundreds of retail stores set to be converted into franchises. This strategy is designed to slash direct costs and streamline operations, but it also means a significant shift in how Verizon interacts with its customers on the ground. At the helm is new CEO Dan Schulman, who recently joined from PayPal. Schulman is known for bold moves and is now driving an aggressive cost transformation, aiming to make Verizon leaner, more agile, and better positioned to compete in a cutthroat industry. Schulman argues that simply relying on price hikes is no longer a viable path forward, especially as subscriber growth slows and customers become more price-sensitive. He believes that innovation and efficiency, not just higher bills, are the keys to long-term survival. Verizon's subscriber base has shrunk for 3 straight quarters, a worrying trend that follows years of massive spending on spectrum and acquisitions. The company is now under pressure to reverse this decline and prove that its investments can pay off. The company is betting that savings from layoffs and restructuring will free up resources for customer retention strategies, like better handset deals, improved service, and new loyalty programs, to stop defections to rivals and win back lost trust. It's a high-stakes gamble. The question now is whether a slimmer, more focused Verizon can truly outcompete giants like AT&T and T-Mobile, who are also fighting fiercely for every customer. The timing just before the holidays makes the cuts even more painful for thousands of families. For many, the news means not just the loss of a job, but uncertainty about the future at a time that's supposed to be filled with hope and celebration. This is more than a corporate shakeup. It's a dramatic shift in how one of America's biggest companies does business, with ripple effects that could reshape the entire telecom landscape. The outcome will ripple far beyond Verizon's walls, impacting employees, customers, competitors, and the broader economy in ways that are only beginning to unfold. Verizon's layoffs are a symptom of a broader cooling in the US labor market. After a period of strong growth, hiring is slowing and companies are trimming payrolls. The recent government shutdown has further dampened business confidence, cutting GDP growth projections in half for the quarter. Unemployment, once at historic lows, is now expected to rise to 4.6% by mid-2026. Weekly data shows it's getting harder for laid-off workers to find new jobs. This environment pressures companies to cut costs, triggering a domino effect of layoffs across industries. For American workers, job security is fading, replaced by growing uncertainty. The chill in the labor market is real and spreading. The question now, is this a temporary slowdown or the start of something deeper? North of the border, Canada's economy is showing surprising stability. Manufacturing jobs are rebounding, and the unemployment rate is trending down after peaking at 7.1%. Strong consumer spending, supported by improved household finances, is insulating the economy from global turbulence. The recent rise in unemployment was driven mostly by slower hiring of younger workers, limiting the impact on overall demand. The Bank of Canada cut its key rate to 2.25% in October and is expected to hold steady, signaling cautious optimism. Domestic demand remains robust, giving policymakers confidence in the country's underlying strength. Unlike the US, Canada's central bank isn't under pressure to stimulate a faltering economy. The contrast with the US is striking. While Americans brace for layoffs, Canadians are seeing signs of recovery. For now, Canada's resilience stands out in a turbulent world. The numbers reveal two economies moving in opposite directions, each shaped by unique pressures and opportunities. While both the US and Canada share a border and deep economic ties, their fortunes are diverging in ways that are impossible to ignore. In the US, Verizon's 15,000 layoffs are part of a broader trend pushing unemployment toward 4.6% and GDP growth down to just 0.5%. These numbers are more than statistics. They represent real people facing uncertainty and a business climate where caution is replacing confidence. CEO Dan Schulman's drastic cuts reflect a market where price hikes are no longer enough to drive growth. Companies are being forced to rethink their strategies, focusing on efficiency and survival rather than expansion. In Canada, the story is different. Unemployment is falling, manufacturing is recovering, and the central bank's steady rate policy reflects confidence in domestic demand. Canadian businesses are cautiously optimistic, buoyed by a resilient workforce and steady consumer activity. The U.S. Federal Reserve, meanwhile, is preparing for more rate cuts to counteract the slowdown. Policymakers are searching for ways to reignite growth and prevent a deeper downturn, even as uncertainty clouds the outlook. This growing gap in interest rates highlights the different diagnoses. While the U.S. is treating a slowdown with aggressive measures, Canada is managing stability, choosing patience over panic. For Verizon, the gamble is whether layoffs will free up enough capital to win back customers, or if the cuts will erode morale and service quality, making recovery even harder. In Canada, strong consumer spending is both a strength and a risk, fueling growth but also limiting the central bank's ability to cut rates further without overheating the economy. The divergence is more than statistical. It's reshaping lives, business decisions, and government policies on both sides of the border. Workers, families, and leaders are all adapting to a new reality. The real-world impact of these trends is just beginning to unfold, and the choices made now will echo for years to come, shaping the future of both nations in profound ways. Behind the numbers are real people. 15,000 Verizon employees facing job loss just before the holidays. The layoffs will ripple through communities, hurting local businesses and shaking consumer confidence. When a major employer cuts jobs, it can trigger a wave of cost-cutting across other companies, deepening the downturn. This negative feedback loop, layoffs leading to less spending, which leads to more layoffs, can be hard to break. In Canada, the absence of mass layoffs has preserved consumer confidence and economic stability. A Windsor factory worker feels optimism, while a U.S. tech manager faces anxiety. The political stakes are high. In the U.S., job losses fuel public anger and demands for government action. The Verizon cuts will become a symbol in debates over economic policy and leadership. In Canada, stability gives the government room to invest in infrastructure and defense. The human and political consequences of these economic shifts are profound. The diverging fortunes of the US and Canada are clearest in their central bank's actions. The Federal Reserve, facing a slowdown in layoffs, is preparing to cut rates to stimulate the economy. Its benchmark rate could drop to as low as 3.25% by mid-2026. The goal: make borrowing cheaper and jumpstart growth. In contrast, the Bank of Canada is holding steady at 2.25%, confident in the country's resilience but wary of stoking inflation. This policy gap affects everything from currency values to investment flows. The US is fighting a slowdown, Canada is managing stability. For now, their monetary paths are moving further apart. Experts are watching these shifts closely. Analyst Craig Moffett says Verizon's layoffs are a bold, risky move to fund customer retention, but it's unclear if it will be enough. The company's radical restructuring is a high-stakes response to losing ground to rivals. In Canada, economist Claire Fan notes that strong consumer demand is both a blessing and a challenge, limiting the central bank's ability to cut rates further. These expert insights reveal the strategic calculations behind the headlines. Verizon's gamble could set a precedent for other US giants under pressure. Canada's stability is the result of strong spending, not just luck. The next chapter for both economies will be shaped by these bold decisions and underlying pressures. As 2026 approaches, North America's economic map is being redrawn. The US faces uncertainty, with layoffs and a nervous labor market testing policymakers' ability to engineer a soft landing. Canada's outlook is steadier, but strong demand could bring new challenges if inflation rises or the US downturn deepens. The divergence prompts reflection. Why has one economy proven more vulnerable, the other more resilient? The answers will shape future policy and business strategy on both sides of the border. The story is far from over. These economies remain deeply connected. A US downturn will affect Canada, just as Canadian stability supports American trade. Staying informed and engaged is crucial as decisions made now will echo for years to come.